Okay, we're going to quickly go over how to read a benefits report. Just a very, very general, simple benefits report. So if this is your first time looking at something like this, it can be very confusing with all the insurance-y terms. So just wanted to quickly go over it with you. So when you're reviewing something like this, you can make the best decision for you and your benefits and your company and your employees. So this group is ABC Company and just super generic information. And here is to show you just some differences between deductible options. In many benefit plans, you'll see bronze, silver, gold, and platinum. Bronze being the least expensive and gold or platinum being the most expensive with the best benefits. So here, this first line says deductible. The second line says PC/specialist, which is primary care/specialist, coinsurance, OOP limit, which is max out of pocket. And this is the maximum liability that a member, an employee would have in a calendar year per person on the plan. Most of them have a maximum of 2. So for instance, a family would be, what is that? $15,600, something like that. So 7,800 times 2, right? Would be the max. Wouldn't matter if it was an employee plus spouse or employee plus family with 6 kids. It's the same. It's usually always times 2 or 3. Okay, so just throw a lot of insurance-y terms at you. Let me break it down in an example, real life example, so that you can understand what exactly this means. So in an unfortunate event, like a $50,000 claim, God forbid, an employee goes into the hospital. They are going to pay the first $1,000 out of their pocket at 100%. Nothing in that scenario is going to be covered by the insurance company until the employee is first paid out $1,000. Then coinsurance kicks in, okay? And this is 100% coverage up to the max. And in this plan design, an employee would pay $600 a day up to 5 days, which would be, if they were in the hospital for 30 days, that would be $3,000. Okay, so in order to meet their max, they would have to go to the hospital at least 3 times. The first 2 times would have to be more than 5 days, and then the subsequent time, the third time, could be, just a couple of days to meet that max. Everything after that max is covered at 100%. So it is not per incident like in car insurance. You have a $500 or $1,000 deductible. Every time you get in an accident, you pay that deductible. Well, with medical insurance, it's per calendar year usually. Most plans is per calendar year. So January 1st to December 31st of every year, right? Okay. And then in this scenario, it's a $200 deductible. So in the same $50,000, God forbid, accident, illness, hospitalization, the member pays $250 out of pocket in this scenario, okay? And they would have a $600 per day hospitalization. So in these 2 scenarios, these 2 plans are very similar. And you'll see that with most gold, when they fall into a category, since these 3 are all gold plans, they're going to have very similar max out-of-pocket coverage. Now, when we go to, let's look at a bronze situation. So bronze here is usually $5,000 to, let's say, $8,000 deductibles. Same situation, $50,000 claim, the member pays the first $5,400. After that, they're paying 50% of that claim. Okay, so the remaining 44,600, right? That 50% is not indefinite. It doesn't go on forever. It maxes out at $8,200. So In a worst case scenario situation, even with a high deductible plan, the most, in an unfortunate event like a $50,000 claim, the most this member would pay is $8,200. Every incident or every claim after that, once the max is met, is covered at 100%. Okay, similar to that plan, you've got a silver plan, which those are usually around a $2,000 deductible. This one is a $2,100 deductible. The member is paying 45% of that $50,000 claim after they've paid out the first $2,100, and their maximum is $8,200. So in these two scenarios, in a high cost claim, they're actually paying the same. And you can see that similar to the gold, right? All the gold plans, they were pretty much paying the same in a high cost claim. And then when it gets down into, the everyday occurrences. So employees, when they are looking at plans, they look at the deductible and the copay mostly. They want to know how much they're going to pay when they go to the doctor. So this plan would be very highly valued by most employees in comparison to the bronze, even though a business owner will look at this and say, well, I might as well pay less and have the same max risk. Well, just know your employees don't think like that. They are going to be looking at this copay very intensely. Okay. And so most employers find that it behooves them to get a silver or gold or sometimes even a platinum when looking at employee satisfaction. Okay. If that falls out of the price range for the employer, what we can do is offer something like a bronze plan, especially for a startup. This week, I'm talking about startups mostly. You sponsor this plan at a percentage that you can afford, either 80% or 100% if you can afford it, and allow the employees to buy up. So in this instance, John could buy up for about $40 a month. That's coming out of their paycheck pre-tax. And so $40, they're going to get about 20% savings. So $40 is going to feel more like $25 or $30 out of their paycheck for, in their perception, a much better plan. Same with this plan here. They could get, well, maybe not that plan, that's an HRA. So for instance, this plan right here, they're going to be paying, the total is $327. So it's about an $80 per month difference. And again, the employee is going to be paying, saving about 20% because it's going to be coming out of their paycheck pre-tax. They're not going to be paying taxes on any of the payroll deductions to pay their portion. So that $80 feels more like $50, $60, okay, for a $0 deductible versus a $5,400 deductible. So employees really value that buy-up option. That's a way to really maximize your benefits if you're a startup and you're just looking at getting a new benefits package for your employees. And down here, most startups are going to be in the small group category. So in small group, every single rate is determined by the age of the employee. Okay. So you can see here that John is the youngest at 25, and we've got Jean at 35 and Jack at 45. And you'll see that everyone's rate is different. Even a 26-year-old would be different than a 25. So the most rating for smaller groups, there is a different rate for every single age category. So 25, 26, 27, 28, 29, 30, and so on. Every single age has a different cost. Now, they do not birthday bill anymore. Most plans do not. So if, let's say, you make this effective January 1st and John turns 26 in February, he will be locked into this rate for 12 months. So all of the rates are locked in for 12 months. You don't have to worry about adjusting the rate at their birthday. And he would be re-rated for that 26 at next year's renewals. Okay, so that's just a really quick overview. I don't want to get too in the weeds on this one. Just wanted to give you a nice overview on how to read this report. And if you are interested in evaluating employee benefits, please click one of the links down below. I have a questionnaire that can be completed to start that process. It's no pressure, all consultative style questioning to make sure that I am understanding exactly what your business needs and exactly what you're looking for so that I can provide the best advice to you on how to maximize your benefit dollars. So again, click a link down below, check them out. Please follow me on LinkedIn or Facebook. I would love to hear from you. I also have some other links down below. So please take just a few moments, 1,000, 1,000, 1,000, hit that like button, make a comment, a little smiley face, a hi, how are you? Something like that. And subscribe and share this content with someone that you think will find it valuable. I appreciate you, and I will talk to you on the next one.